Good afternoon, everybody. How is everybody doing today? My name is Souhail Fadlallah, Business Development Manager at Vantage, representing Vantage. I'm happy here to share a very specific topic that I chose that I believe is going to resonate with a lot of you, which is the human side of FinTech, burnout, overtrading, and cognitive overload in 24/5 markets. I'll give you 1 minute to read the disclaimer. Okay, so we're going to be discussing 4 sections. The first section is the market never sleeps. Obviously, humans do. The cost of always being on, where on the charts. When more data and indicators stops helping, as well as dopamine, design, and the gamification trap. Now, we all know that we're not a robot, but then again, we do know that there are bots, there are people that use bots and expert advisors to trade. But then again, we know that humans do need rest. So the market never sleeps, but humans do. So we've spent billions on fiber optics and AI to eliminate latency. So the lower the latency, the better. And while your MT4 and MT5 executes in milliseconds, your brain's reaction time increases by 300% after 15 hours awake. By the way, I've done my research. In a world of AI, instant fills, the slowest part of your setup is your own biology. And the message here is if you're trading the Tokyo open for 3 hours on 3 hours of sleep, you have the latency. Now, what about the biological edge and the carry trade of energy? Servers, obviously, or robots or bots, algorithmic trading, does a revenge when trading is happening. But who does revenge when trading? Humans do, because that's what we built. Now, Forex is 24/5, but your prefrontal cortex, which is the part that manages the risk, shuts down at night. And trading during your biological off hours is a negative expected value move. So you might catch a move, but you'll likely blow the profit, making tired mistakes in the London or New York session. Now, what about the fatigue? Now, again, I've done my research. This is actual fact. 17 hours without sleep is equivalent to 0.5% of blood alcohol level. And most traders don't fail because of their strategy. They fail because they hit their daily drawdown, limit while zombie trading at 3 a.m. So obviously, when we are trading, we end up trading for so many hours that our load on our capacity level on our brain becomes so overloaded that we make decisions that may end up having us losing positions. And professionals isn't about being always on. It's also about knowing when your biological risk is too high to take a trade, just as we look at the picture here. So would you fly with a pilot who's been awake for 20 hours? Obviously not. So ask yourself this question when you're opening the chart and when you're about to take a decision to click that buy or sell. But what about the hidden cost of always being on? So I'm very old school, so I like to open my chart on a desktop. So I'll open my desktop or my laptop, and I will analyze my charts, and then I will take a decision on whether to take a buy or sell position on any time frame. But today, we have smartphones. It's very, very easy. You take out your smartphone, you open the MT4 or the MT5 platform, you're looking at the 1 hour chart on gold, and you take a quick decision to buy or sell, and that decision isn't enough as when you're opening your desktop and you're looking at the chart and you're doing more extensive trading analysis as rather when you open the smartphone to take very quick decisions. And every time you check a price on your phone, at dinner or lunch, you trigger a micro spike of cortisol. And you aren't monitoring the market here at this point. You're exhausting your mental capacity or capital before the high probability trades even show on your chart. So that's the risk that you're taking here. And the feeling that if you aren't clicking buy or sell, you aren't working. Because a lot of people, they're only opening the chart just because they want to open a trade so that they end up making a profit. But do you make a profit all the time? To make a profit, obviously, you need to do a lot of analysis and preparation and planning. And that's how it works. And every trade requires mental energy. So by the New York session open, must always on, because of the New York session volatility, traders have already spent their discipline budget on low quality Asian session, say for example from 2 a.m. until 6 a.m. And the mantra here is to sit on your hands while you wait for the setup to show on your chart. And when you stop seeing pips as money and start seeing them as points in a game. So you're trading to make money, and you feel like sometimes you're just gambling, but that's not how it's supposed to be. You trade as a business. So you treat it as a business, and you have a plan and a strategy, and you journal, so you always end up on the profit side. And then there's the 90-90-90 rule. So 90% of traders lose 90% of their money because they spend 90% of their time on the screen or trying to find trades that can relate to profit. And defined power hours, if you aren't in your window, the app is deleted. So the trap here for the beginner is believing that one or more indicator will provide certainty. Just ask yourself a question. When you look at this chart, do you actually feel like you can analyze the chart based on this picture, on this chart here? There's probably at least 10 or 12 indicators that will give you a lot of stimulation to open a trade. But then you will be confused, but it won't give you really a certainty that the trade is really going to go down or up based on whatever chart that you're looking at. And human working memory is a finite resource, and once you track more than 5 variables, your decision quality doesn't just plateau, it actually crashes. And when your indicator gives conflicting signals, example, the relative strength index is overbought, but the trend is bullish. So the trend is bullish, but then again, the RSI is overbought. So what do? You're going to take a buy position or a sell position. But then again, you cannot rely all the time on indicators. So your brain freezes leading to missed entries or hesitation trades. But what about the illusion of knowledge versus accuracy? Now, research shows that as a trader gathers more information, the confidence in their trade increases. But what about the accuracy? It does not. So that's a fact. And over-researching leads to confirmation bias. You only see data that supports your trade. And lately, we have a noise problem. We must have heard of it. Ignore the noise. If you are trading, you must have heard of it. And the data problem here we have is always the noise. So more data usually just means more noise. Now, look at the chart and compare to the chart that I showed you before with at least 10 or 12 indicators. And then look at the chart that looks more clean and more easy to define the structure of it, and as well as the direction of that chart, whether it was bullish or bearish. So where here we see that it's a bullish trend. So professional desks or traders focus on high conviction variables rather than maximum information. And that's very, very important. But if you can't explain your trade to a 10-year-old using only 3 indicators or factors, you're suffering from cognitive overload. Perform a chart audit and analyze the markets. Delete every tool that doesn't suit you or bring you any information that will help you to take a decision to become a profitable trader. Now, what about dopamine and gambling? Because there's people that actually trade and just to gamble. That's the truth. But there are professionals that do it on a more professional basis, where they open their charts, they analyze for half an hour even, or 1 hour, and sometimes they don't find any trades, so they close their laptop, and then they wait for a trade and an opportunity to come out. And that's how professionals do it. So the pull to refresh, price update, and push notifications are designed to mimic slot machines mechanics. So it's more like when you go into Las Vegas and you're trying to make money, casino trading. So every ding or green flash triggers a dopamine hit, right? So you aren't trading for profit, you're trading for a chemical rush. And the risk here is gamification turns into a high-risk stakes financial profession into low-stakes entertainment habit. So the danger of frictionless is management requires you to trade fast. Good risk management requires you to think slow. So the platform here really matters. So the platform that you're actually using matters because there are platforms that will allow you to trade just to trade. But then there are platforms that allow you to trade as a professional, by looking at different indicators and different data and different chart options, to make a decision and become a profitable trader. So features like leaderboards and social trading feeds trigger fear of missing out and herd behavior. And the trap here is when trading feels like a game, you stop respecting the risk of return. So like I said before, is that the platform really matters here. So choosing the platform that prioritizes analytical tools over excitement features and introducing manual friction, writing down your trade rationale on paper before clicking execute, just as I mentioned, is journaling. You write your trades, so you have a setup and you have a plan and you have an actual strategy that works for you. And for the final words, is the goal of FinTech should be to empower the trader's mind, not to exploit their impulses. And I want to thank everybody for listening. And just to give you a very good brief, or a short brief about Vantage. Vantage has been 15 years, and we are regulated in London by FCA, Financial Conduct Authority, and we have regulations, ASIC regulations in Australia as well. We offer both MT4 and MT5. We offer different solutions for institutional clients as well as retail clients. We have our booth number 8. If you have any questions, I will be there, and we have a team that we can answer all of your questions as well. Thank you very much.